Hi, everybody. My name is Nick Kost, and I have, as my final project, I have created the program that is determining the most stable financial assets in the market. So I was working part-time, mostly just conversing with the marketing director of one cryptocurrency company named Prasaga. Their idea is to create a cryptocurrency that is basically the mirror of exchange, which is the old idea, but there is no cryptocurrency in the world yet that fulfill this premise because of the volatility. So each and every cryptocurrency is very, very volatile. That is why it can't be a mirror of exchange because, if you pay for something, it's very inconvenient when $1 of your payment is every day costs different amount of money. So the basic plan for the cryptocurrencies that try to be the mirror of exchange is that usually what they do is that they create the backbone and other assets of the cryptocurrency. So it's not just speculational, it's not just the algorithm, it's also the money behind the thing. And there's certain cryptocurrencies that exist now and they kind of work that way. For example, Tether, they're basing their stablecoin on USD, on dollar. The problem here is that with the certain financial policies and fiscal policy and monetary policy, the dollar is not the best choice in the market. But what is the best choice is actually not one asset or stock or etc. It's actually the portfolio of stock. So the idea was to create the algorithm that will look at the data of the stocks and determine the least volatile and most stable stocks in the market and make a list of them so people can base their portfolio or their financial portfolio on that list. And these are the research questions on which, after creating the algorithm and actually running it, I was able to answer and the results appear to be quite interesting. And I hope that it would be fun to know all these things that have basically happened there during that time. So I have created basically three programs. One is computational. One is that creates computes the indexes, computes volatility based on the standard deviation formula and the classical volatility index computation. Another is loader, which basically I used, I iterated through C3, but I have consulted my very good friend that works in Amazon. He said that it would be quite beneficial if I will learn JSON files and can, work with JSON files. And basically loader loads the dictionary that I create with a ticker and the values of volatility and RGI. And then loads it into the JSON file. An engine that is basically the client program. You pass the parameters like, for example, I wanted 10 stocks. I want to base my calculations on volatility and relative growth index. It just passes the list. If you chose 10 stocks, it will pass the list of 10 best stocks sorted based on these things with their stats. Yeah. Or you can do whatever you want. You can basically base everything on just on volatility or just on the RGI index, pass all these parameters and get however much stocks the list of stocks you want, like from the best one based on these parameters to the kind of the least one. So the results of these things, as I said, it appeared to be that these companies that are actually the most stable are not the most well-known ones. That is why they do not suffer from the big volatility changes, because people just literally do not trade them a lot and they use very low trading volumes. And these companies are very unrelated to the politics. That is why also there is not like social turmoil for these companies. Nobody knows them. However, they're growing, and investors are basing their ideas on the revenue and stuff, and they're producing very great revenues, but at the same time not inducing into argues or politics or whatever. The future of this thing. So as I said, there are two indexes based on which I base everything. The first is volatility index, which is calculated by the simple standard deviation formula. Another RGI, relative growth index, I have created myself. So basically it takes the rate of change of the S&P 500 as the basis. Rate of change of S&P 500, and says that the best stocks are close to the rate of change of S&P 500, because as the backbone of the cryptocurrency, we do not need things to actually grow very fast or fall, or we're not about the growth, it's about the stability. And I thought that for now, the best way to understand this stability is to say how close is the rate of change of this stock to the rate of change of S&P 500, and therefore kind of American economy. But this is not the most genius idea. So there is definitely a room for improvements, because the S&P 500 is not like the best representation of absolute stability, and it's very stable compared to other things, but it's not the best representation. And I think just calculating the rate of change on the period like doesn't imply a lot. Doesn't imply the drawbacks and downsizes during that period, which may be very, unfortunate for the portfolio and stuff. So it is possible to work on the RGI index and and imply more math probably to determine better this kind of the stability, and find the model on which we base the stability, the best stability model. As I said, I choose S&P 500, but we can improve this and we can improve the results, therefore. Another thing is that probably this is kind of a library in a way, and it would be cool if it's possible, and it's possible to connect it to the brokerage itself, and kind of create the algorithm that automatically adjusts the portfolio of the for example, the people that own the cryptocurrency, they create the cryptocurrency and flush it out in the market, to just adjust this thing, because times are changing, the companies are changing, nobody knows what happens. And if some company become more volatile, we can just switch it to another one. And this is probably kind of a machine learning in a way problem that may be implied to this, and I'm trying to do this. So auto adjustment, so not just, this is more of the kind of, you choose the parameters and look at them, but it can be improved to actually that you do not need to even look at them to adjust the portfolio. This algorithm would adjust the portfolio itself without like manual actions. And another is client interface. kind of creating, the better thing rather than like running the program in a terminal for Python. It would be better to, I don't know, to do something that would be more uh, familiar to the people that are not familiar with the Python terminals, and it may be more beneficial to create this client interface a better way. I already created that partially client interface, but design and stuff, and to make it more accessible to the general public. Yeah, so that is my project. I wanted to say a real thank you for every TA staff, and specifically our professor Hunter. I really appreciated the course. A lot of things that I knew. A lot of helpful information in data science, and specifically for my thing in finance. It's very, very, very beneficial. So thank you very much. Good luck on your projects. Have a nice spring break. Yeah, thank you very much. Bye.